Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Welcome back, guys. Today, I'm going to continue to look at accounting for overheads. And as promised in our previous lesson, I'll be focusing on calculating predetermined overhead rates. So at the end of a lesson, you should be able to demonstrate how to allocate manufacturing overhead to products using predetermined overhead rates. Now, what is predetermined overhead rate? What is that? Basically, it is an allocation rate that is used to apply the estimated cost of manufacturing overhead to cost objects for a specific reporting period. In simple terms, simple put, predetermined overhead rate is a simple way of allocating manufacturing overhead to products. Now we're going to look at calculating predetermined overhead rate. And in calculating this, there's a formula that you will use. The formula is POHR, basically, which is the abbreviation for predetermined overhead rate, is equal to estimated or budgeted overhead during the period divided by activity level during the period. Now, please note that the activity base can be hours, units, or cost. It can be direct labor hours, machine labor hours, units, or cost. All right, so now that we have the formula in calculating predetermined overhead rate, let's just look at an example. Here we go. JB Limited has a budgeted cost of $200,000 as overhead cost for 2021. The company used machine labor hours as its activity base. The estimated activity level for 2021 is 10,000 hours. Calculate the predetermined overhead rate for 2021. Let us highlight the variables that we have in this example. So the budgeted overhead cost is $200,000. The business used machine labor hours as its activity base. So they use that to apportion the cost to the cost object. And the number of hours that we're seeing is 10,000 hours for the period. Now that we have this, we're going to state our formula because we're going to get into our calculation. And because you're working with formula, it is advised that you state your formula first. So here we go. Remember, it is the estimated or budgeted overhead for the period divided by the activity level during the period. So let's pick up our figures. The estimated cost is $200,000. We're going to divide that by the 10,000 hours, and that gives us a result of $20 per machine hours. So basically, based on the amount of hours that the machine worked, the actual hours that the machine worked to get that cost object ready, you're going to multiply this $20 by that in order to allocate the overhead cost to that particular cost object that is produced by the business for the period. And this takes us to the end of this lesson where we look at allocating overhead costs using predetermined overhead rate. And remember, the formula is estimated or budgeted overhead during the period divided by the activity level during the period, where the activity level or base can be hours, units, or cost.
Like, share, and don't forget to subscribe.